Welcome to Trade Pro. In this video, I'm going to show you a 70% win rate, highly profitable trading strategy, then test it 100 times in a row so you can see how it performs for yourself. Now, this strategy combines the 50-period exponential moving average, the RSI, Fibonacci retracements, and candlestick patterns. So I'll go over the strategy, do all the 100 tests, and go over all the results at the end. But first, make sure that you smash the like button, comment down below for that YouTube algorithm, of course, and subscribe if you haven't. Also, check out my Webull link down below if you want 2 free stocks valued up to $1,850. Appreciate you guys. Now, let's move on with it. All right, before I get into the strategy, just a quick shout out to a Trader's Journey YouTube channel. He is daily live streaming trading on the Forex markets using a very similar strategy to the one that I'm showing in this video. And it's a bit more complex. He's added a bunch of different layers to it. So just check out his channel if you're interested in, seeing it live and seeing a more complex version of this strategy being used in real time. But anyway, let's get into the strategy. All right, so quickly going over the indicators. We have a 50-period exponential moving average, and we have a 14-period RSI. And we're also going to be using the Fibonacci retracement tool. All right, let's go over all the rules for entering a long position. The first thing you need to spot is a pullback down to the 50-period exponential moving average. The next thing you're going to do is draw in your Fibonacci retracement tool and make sure that price has pulled back to at least the 50% retracement level. Next, you're looking for hidden divergence on the RSI. In this case, hidden bullish divergence, which means a higher low on price, but at the same time, a lower low on the RSI. Once you've spotted all of these factors, you can just wait until there's a bullish hammer or a bullish engulfing pattern. We get a nice bullish hammer right here on this green candle, and that is our buy signal. So take the buy, set the stop below the wick of that candle, and target the high of the pullback. This is the trade setup. So what you're going to do is take half of your profit at 1 times the risk, move the stop to break even, and then continue targeting the high of the pullback with the rest of the position. That is how I'm going to be doing the long positions for this 100 tests. Now let's get into a short position example. All right, here is a short example. So for a short, we're looking for price to pull up into the 50 EMA. Unlike with a long, we're looking for price to pull down to the 50 EMA. The next thing we need to see is that Fibonacci retracement to the 50 level, and it does make it there. Next thing we want to spot is the hidden divergence. So for a short, hidden bearish divergence means a lower high on price, but at the same time, a higher high on the RSI. Next, we are waiting for our shooting star candle or our bearish engulfing. So we get that right here and set our stop just above that candlestick pattern and target the lows of the pullback. On this one, it looks like we hit our 1 times risk target, take half our profit or half our position closed, and then get stopped out. So we actually are out of this one, but we made some profit. You can re-enter as long as you get another candlestick pattern and all the criteria is still met. So we get another re-entry right here with the shooting star, and we can get a re-entry, still targeting the lows and giving us a 1 to 7.7 risk reward ratio. This one actually ends up hitting both targets. So we hit our 1 to 1, move our stop to break even, and then get that 1 to 7 risk to reward ratio. Okay, so that is the strategy. Very simple, and it's a bit subjective with the hidden divergence, but if you do enough practice and demo trading, you can definitely make it work. Now I'm going to get into the 100 tests and then go over all the results at the end. So let's go. right, the results are in after the 100 tests, and they're really good, so let's go over them. The market was pound against the Japanese yen using a variable risk-reward ratio where half of the position was closed at 1 times risk, and the stop was moved to break even at that point. And the second target, the highest was 1 to 5.24. The rest were all over the place. The time frame used was the hourly, and the time for 100 trades, 16 months, which is pretty normal for an hourly time frame strategy. So 70 winners and 30 losses, giving it a 70% win rate, which is very good, obviously. The most wins in a row was 8, and the most losses in a row was 3. And the gain on the account was 55.68%. So the strategy did really well, not a huge drawdown at all, good winning streak. Overall, really good performance. Both targets were hit 36 times. So if we're talking about more of a breakdown here, both the 1-to-1 target and the secondary variable target were hit 36 times, which totaled to 68.68% on the account gain. And then times where only the 1-to-1 target was hit, then the rest of the position was stopped out, was 34, so that was plus 17% on the account. And then 30 times where it was just outright stopped out, never even hit the 1-to-1 target. So minus 30% on the account. So there's the simple math, just add up the two and subtract the losses. And that's how we get our gain on the account. So this thing did really well, and it's good for someone who doesn't like drawdowns, likes to win most of their trades, even if it means just hitting a 1-to-1 target and then getting stopped out with the rest of your position. But obviously, this can be a bit subjective. So guys, when it comes to hidden divergence or divergences or anything that's subjective, market structure, whatever it may be, just make sure to do your own testing and practice a lot, do your demo trading. Don't want anyone just jumping in with a strategy when they haven't actually tested it for themselves and done all the proper practice, because you're probably going to get destroyed, not only because you haven't become familiar with the strategy, but also your trading psychology is just not developed yet. So no matter what strategy you're using, even if the results show profitability, you're not going to be profitable based on your emotional decisions that you're going to be making, and you're not going to be sticking to the system. So just do the proper testing, guys. It's best for you. Now let's get on to the spreadsheet and compare it to the rest of the strategies. All right, here it is on the spreadsheet, falling at spot number 4 out of 60 strategies tested so far on the channel, doing extremely well. And what's interesting is a lot of the top strategies use hidden divergence. So we got number 2, number 4, number 5, and number 12 all using hidden divergence. So you can kind of rest assured that it does in fact work pretty well. But if you don't like it because of its subjectivity, then take the basic principle of it and apply it in another way. So the basic principle is really the fact that you're just entering in on pullbacks of the trend and joining the trend for a continuation. And that's a pretty simple concept, and you can do it in so many different ways. It doesn't have to be hidden divergence if you don't want it to be. You can do it with just an EMA pullback or a Fibonacci retracement or price action, whatever you want it to be. But I believe that is the best way to be trading, just that general concept of entering into trends on pullbacks for continuations of the trend. And you can look at any chart and just say, wow, the best time to buy or sell is on a pullback and a trend. That's just, you can look at it and it's clear that you make the most money if you buy on the pullbacks and sell at the top. So why not try and replicate that in real time with a method to follow to actually identify when to be entering and when to be exiting? So that's essentially what I have discovered is the best way to be trading. And of course, you're going to get stopped out and then price is going to go in your favor, or you're going to have a fallen reversal stop you out and you're going to enter at the end of the trend. That's going to happen all the time, but you just have to build up your confidence in the long-term success of your strategy, because no strategy is going to win all the time. It's never going to be like that. It's just not how trading works. You can't get spooked after losing 3 trades in a row and then stop trading your system because you think that it stopped working. Okay, you got to keep trading that exact same system over and over and over again for the long run. And measure your results not based on that day or that week, but that month or that multiple month period. Okay. So anyway, that's pretty much it. The strategy did really well, and I enjoyed the strategy. It's a pretty good one. Of course, it is subjective with hidden divergence, so the testing results will vary. But guys, do your testing, do your practice, do your demo trading, and you'll be just fine. You got to build your confidence over the long run. So it's going to take a long time. It took me 4 years before I could be consistently profitable. So just keep at it, keep working. You have to work hard. It's not going to be easy, but it is going to be simple. You'll figure out it is simple. It's just not easy. Okay. But anyway, thank you guys so much for watching. Don't forget to like the video, comment down below for the YouTube algorithm, subscribe if you haven't, all that stuff. Check out my Webull link if you want 2 free stocks valued up to $1,850. And yeah, that's it. Have a nice day, guys. Thank you.